Well, hello again. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is August 3rd, 2020. We have several topics today that are market-related, relevant, real-time market-moving topics of the day. So let's get right to it, and thanks for watching. Our first topic to discuss, news over the weekend, China's Trojan Horse by way of an app on our devices in the United States. The Trump administration came out and threatened on Friday and said even on Saturday that they're going to ban a popular app that is based in China that's on over 100 million active users in the United States, or devices, if you will. Why that matters is there's a lot of evidence to support that this app is not only based in China, but more importantly, has a cybersecurity threat to the United States, especially the youth, essentially, is what the administration is reporting. Now, in the Schein household, we're very familiar with the TikTok app. I've learned a lot from my daughters as they are, on it and using it. But we've had a lot of healthy and, sort of contentious discussions as it relates to, what this app means. But actually what they could be doing, meaning China or anybody, if you will, especially as it relates to technology. And my daughters have said, they've been on the forefront of this conversation, said that, the United States is looking to move TikTok to the United States to marry it up to a company here so that they could close sort of the Trojan horse or the back door of information that is being accessed right now, specifically by China. That's always been a hot topic as the political, we are literally less than 3 months away from, actually 3 months to this day, to our, 2020 presidential election. So any particular candidate that happens to throw out China in the headlines as a, bad actor, is just playing to both their political bases respectively. In this case, Trump is doing it very, very, very specifically and very politically, as he's indicated he would go after China any chance he could do that. That being said, politics aside, me as a parent, I legitimately think that this is a threat. This is a cybersecurity threat. Back in the day, we used to have, the threats would be visible. They would be, viable. You have the Cuban Missile Crisis, but if Cuba or Russia were ever to do something, you would see a missile on a radar. Today, it's a cybersecurity. I mean, they could be in our devices from anywhere around the world, and we're not talking China very specifically. We're all subject to a new world, unfortunately, from a cybersecurity threat. So this is a conversation point, whether it's TikTok today or another app or another particular device tomorrow, and sort of a nefarious actor around the world that wants to do some harmful things to us. So we at Blanke Schein Wealth Management are big believers in cybersecurity. We overweight cybersecurity when we can and when it's appropriate in portfolios for our clients, simply because that's something that's not going to go away, and we believe it's a tremendous growth opportunity. So again, real-time relevant, market-related information, we're seeing it play out in the headlines today, but we have to pay attention to this because this is a topic, whether it's this administration or the next administration, this is something for the next decade plus that we as parents, as citizens of the United States, need to be carefully and thoughtful of and be paying attention to. My next topic is talking about the 10-year Treasury. This is a conversation or continuation of a conversation that we had on Friday, if you followed my Friday broadcast. Simply put, the 10-year Treasury hit an all-time low on Friday, hitting 53 basis points for a 10-year U.S. Treasury bond. That took out the previous low, which was 54 basis points back in March when, theoretically all heck broke loose as it relates to this pandemic in the United States. And so adding stress to our financial system. And again, that's an indicator. Why we watch that on a dashboard, why it's important to keep that on our dashboard to watch as we manage and navigate through manage portfolios and navigate through markets, is simply because it's an future indicator of sort of stress in the economy. In this case, what it's really saying is the indication of, the Congress has not acted and that it actually needs, the U.S. economy is in need of a sort of a CARES Act 2.0, if you will, so an extension of the benefits that has expired on July 31st, especially unemployment, the federally enhanced unemployment benefits in addition to the state. So the 10-year Treasury is indicating that this economy is sick going forward. and it needs some medicine, if you will, or some assistance. And so the Federal Reserve also indicated that they're going to be they're extremely accommodative with their policies. Now we again must see another round of Congress working together, hopefully sooner than later, to come up with some sort of solution that's workable, that's hopefully strategic in the right hands for those that actually need it, and very thoughtful. So I think Congress is taking their time. Again, they're doing what they normally do, which is agree to disagree. But the 10-year Treasury is indicating that in the short term, markets are up today, but in the short term, there's a little time, but not much. So Congress better get to it and better get something, a deal to be made sooner than later, as the economy, again, it's the divergence. There's the economy, and then there's the market. The market is only a handful of U.S. companies that are public that have access to capital, that are going to thrive because they're going to be in business not only a year from now, but 5 and 10 years from now. So it's an acceleration of a trend because this pandemic is going to take out everyone else in between. So all the small businesses are suffering. So they need additional assistance to at least survive in the short run. So the economy of the two markets that are playing out, the 10-year Treasury is indicating that. That's where we're watching it. And let's just hopefully that Congress comes to some sort of agreement sooner than later, because that's exactly what needs to happen. The market's anticipating that fully. Our final topic, we're going to talk economics. There's 2 indicators that came out today. Both were positive. Both were, one was the PMI, Purchasing Managers Index, and that's essentially, it was a 50.9 read, a little bit below the 51.7 estimate that was out there. But the good take-home point on that is it was a 50-plus reading. So that's an expansionary number across the United States, and it just shows that anything above 50 on that number shows that there's an expansion happening. So again, there's the collectively United States on a whole is working together and getting together. So some of our parts are stronger as a whole, and that's what we're seeing, because some states, geographically speaking, are opening up versus other states. So the diversification of states, diversification of regions, and then the America going back to work and then reopening across the United States collectively is happening as indicated in this number right now that we're seeing. The next number was the ISM number that came in at 54.2, which was above the 53.8 estimate. Why that's important is, again, it's another expansionary number. So we want both those numbers, the PMI and the ISM, to be above 50. But the ISM essentially is showing that there's also pricing power. So there's sort of inflation, nothing to be concerned about, but inflation built in from an economic standpoint. And that's really, really solid. That's important. That's healthy sign of the economy. So we know that there's pent-up demand. We know that there's growth again. Again, that'll be translated into our GDP later on for the third quarter. And we'll look back as to, these are indicators that we're seeing some reopening progress and some manufacturing progress and some pricing power progress. So all progress is good, and both those numbers above a 50 are positive. So those are positive. And again, markets are up today. I think what's one of the reasons why markets are up. So thanks for watching. Thanks for listening. Again, like and subscribe, and feel free to share all you can, and we'll see you next time. Take care.